The discretionary S&P 500 and junk debts all hit record highs this week. This is good news. I'll explain why. Especially discretionary is the important piece of this puzzle. Gold is struggling at resistance as dollar is attempting to go higher, and oil is looking quite vulnerable as it approaches a important support level, and if it breaks that level it could collapse to around $40 per barrel, and oil and gas production companies are already pulling back sharply. And the same as gold, copper is also struggling at resistance and also could collapse. We'll see if it will. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, December 6, 2024. Please don't forget to hit the like button, subscribe to this channel, share this video, ask me any questions you like. If you're a subscriber, please stay tuned. We'll have a separate video. We'll be covering namely big one is market breadth, large cap ETFs, some large cap stocks, foreign ETFs, as well as several of the speculative securities such as AvidExchange, Rumble, big move right now, ROKU, some new additions such as Warner Brothers and Pebblebrook Hotel, as well as some of the gold related. If you're not yet a subscriber, consider signing up by going to the description of the video and following there to the link at MasterChartsTrading.com. S&P 500 is again at all-time highs, fresh record highs, so we've pretty much been hitting record highs for a while now. Right here between 5th and 6th of November, big gap up, new records. Now we are seeing continuation of the short squeeze. So short squeeze happens when, let's just say that you're back here in mid-October, decided to sell it short, sell the security short, and let's say you shorted it with a stop above the previous highs, but then we turned around and we made those new highs, and what are you going to do? You're going to need to cover. So you went ahead and you closed your short position by buying an open market the shares of this particular security, in this case S&P 500. So it looks like we're making new records as squeeze continues for the shorts are being squeezed out. So overall, no changes from our posture. The previous opportunity to buy was a long time ago. It was back in October of 2023, so a little bit over a year ago. How do I know? Notice this. Basically, I'm using my indicators. You can find out more about these indicators. But basically, let's just pretend it's July of 2023 where I'm hovering, and we're waiting for the security to pull back to where we want to be buying it. It's the risk is a little bit lower. So we waited until between July of 23 until October 2023, when the security dropped below this blue support resistance line and then closed above it. So that's our signal to buy, basically. And basically that's it. You just sit in a position as long as possible. The more you sit in the position, the better. The less you do in the market, the better. So buy and hold as long as possible, basically. S&P 500, that's S&P 500. Now we're looking at high yield bonds, junk debt, ticker symbol JNK, so very similar situation. Last opportunity to buy was in October of 2023. The reason why we care about high yield bonds is that because of this correlation coefficient down below here. So this is a correlation to the S&P 500. In other words, high yield bonds and S&P 500, generally speaking, correlate very highly. You can see that the correlation coefficient spends most of its time in positive territory. So looking at high yield bonds currently, high yield bonds correlate highly to S&P 500, and they have just made a new record. So there is, in other words, no divergence. We're seeing both high yield bonds and S&P 500 make new records, so there is no divergence between the two. And one other security I wanted to highlight was the S&P 500 consumer discretionary ETF. So I put down here what is in it, so you can see it's a big top-heavy ETF with Amazon and Tesla comprising 40%, a little bit over 40% of the ETF, and the next biggest one is Home Depot at 7%, Bookings at 4%, McDonald's, Lowe's, TJ Maxx, Starbucks, Nike, and Chipotle, and they're all pretty small, but you can see that this item, all of this stocks are what's called discretionary. So in other words, if you don't have a lot of money, you're not going to be buying those items. For example, stuff like Tesla, you're not going to be buying if you don't have any money, so it's a discretionary item. Same goes for Starbucks and Chipotle and things of that nature. And notice what's happening. This is an all-time high. I mean, of course, Amazon and Tesla are both at record highs, but it just shows you how the discretionary items are being still important to the consumer. In other words, there is enough money circulating in the economy, and people are willing to shell them out, and people are not terribly afraid of what's going to happen. So in other words, they have the jobs, they have the security, they keep buying. So you can also see this same chart, XLY, consumer discretionary, on the weekly time frame. So each candlestick is a week's worth of activity, and for example, previous several opportunities to buy, how do we know? We just buy them on close above the blue support resistance line. You can get these indicators on my site, MasterChartsTrading.com. These indicators are available for TradingView.com. So notice that opportunity to buy was in 2023 May, again in October, and then again in April of this year, and then again in August of this year. So basically we buy every time the price comes down towards the blue support resistance line, and we just keep buying. Notice that the latest move was quite strong. So congratulations if you were able to open XLY consumer discretionary. I would keep it open for now. Okay, we're switching gears. We're currently looking at dollar currency index, so DXY. So dollar, we worry about dollar because we trade gold. Gold and dollar normally move the opposite direction to one another, but sometimes they do the same thing. So lately, the correlation between gold and dollar is not 100%, negative, but it's still decent enough to warrant inspection. So dollar is currently in an uptrend. However, it's been pulling back for the past few sessions, and I think it will continue pulling back a little bit more, especially towards this blue support resistance line. And I think at that point we will be expecting some sort of a bottom in action and an attempt to run towards new records, towards new 52-week highs. We're currently looking at the gold on the daily time frame again. So gold is expressed in US dollars. It's gold divided by US dollar. So if the bottom part of this equation, US dollar, is getting bigger, more expensive, it should be pulling this currency pair, XAU divided by USD, down, which is basically what it's been doing since late October. Now, most importantly, I want you to take a look at this recent price action right there for the past, especially after this big drop on Monday the 25th. So notice we dropped below this green support resistance line, and then we have tried on 1, 2, 3, 4, 5 attempts to get above that green support resistance line, which is at around 2,655, and so far we have failed to get above it. So that's what I mean by struggling at resistance. So gold is currently at below this green support resistance line, and it's struggling to get above it. I mean, it's kind of finely balanced, but there is a good chance it will continue pulling back towards the blue support resistance line, which is around 2,480 or 2,500 or so. And I think at that point I would consider it a good opportunity to buy. But at this point, I'm just going to be waiting and seeing what's going to happen. And I wanted to look at oil, CL1 exclamation point. So first of all, oil is in a downtrend. Oil has started its downtrend right there where I'm hovering in May of this year, when they closed below this red support resistance line. And notice this downward facing arrows. They're basically opportunities to sell oil short. So important level to watch is this low, the one that I'm hovering over. It's the low from 10th of September of this year, and the low is at around $65. Okay, current price for crude oil, and this is US oil, is $67. So we're $2 away from just super important support level marked by this September 2024 lows. So let's look now at the weekly chart of oil and why that level is so important. So again, I've shown this chart in the past, but I have drawn in this orange square, and that orange square sort of encompasses the levels that we should be watching where oil has attempted to go lower but failed so far since 2021. Namely, we're looking at the price at around $62, which is the low from November 2021. Okay, so it's around $61.5, $62. So currently the price is where I'm hovering right now at $67, and I just showed it to you on the daily chart, but this formation here from September 10th to October 8th, so it's like an upside down head and shoulders perhaps. I think if it breaks down, we're looking at least the depth of this pattern, the small one that I'm gonna draw it out. So this pattern, basically from September of this year to October of this year to now. So the depth of this pattern is somewhere in the vicinity of $12, so 16%. So if we break down below 65, that's another $12 down or so. We're looking just from this little pattern, we're looking at around $50 oil if it breaks this low from September 9th or September 10th. Now, if we look bigger, for example, this pattern that I'm about to draw out, let's just say we started here in May of this year, went up to October of this year, 2023. I'm sorry, last year, 2023, and kind of like that pattern. So the depth of this pattern is actually much bigger. It's about $30. Okay, so if indeed we're gonna see a breakdown, then that's where I'm getting that price of around maybe even below 40. Okay, so maybe upper 30s. Okay, so that's like a normal sort of corrective action if we see this big pattern play out from the lows in May of 23 to the highs in September 23. Entirely possible. I think oil looks extremely vulnerable currently, and I think again that if we break these lows from September 10th of this year, which is around $65, we can strongly collapse to the bottom to around $50, possibly lower. This would be terrible for places like Iran and Russia, obviously, because they depend on oil to make money to oppress their population and wage war. It will be great for pretty much everybody else, so hopefully oil prices will continue lower. Very briefly, I want to show oil and gas production and exploration and production. So this is a last, let me see, like 5 to 6 trading sessions. Notice it just collapsed. So oil and gas production is going down as well. And again, very briefly, I wanted to touch upon copper futures. So currently copper is in a downtrend. It once again began a downtrend on early November, November 12th, and again so far has failed to get above this red line, and so basically we're seeing signals to sell it short again. So copper seems like it wants to go lower, and I mean probably demand is just not very big. So how big of a deal is this? People say that copper and S&P 500 are quite strongly related. I am not as sure. This is copper, and down below here we see S&P 500 correlation to the S&P 500. So correlation are not great. So you can kind of see they're sort of all over the place. So some people say that if copper breaks down, then stocks will be next. I am less certain of that. Yes, copper has broken down and most likely will continue lower. That does not mean that we will have a bear market for stocks. Okay, that's it for this week's recap. Please head over to MasterChartsTrading.com. If you have any questions, you can send me a message. I'm also available on TradingView.com. You can send me a message there. My name on TradingView.com is at MasterCharts. You can also go to my website, MasterCharts Trading. If you click on Help and click on Social, there's all of my links where you can find me. You can also send me a message through the website at MasterCharts Trading. Sign up for one of the products. So I have 3 products, trading indicators. So these lines on the chart, you can have them on your chart on TradingView.com. Just sign up at MasterChartsTrading.com, and I will open the door for you on TradingView. It's easy. It sounds complicated. It's not. Newsletter, I send out daily alerts and weekly members only videos, so you can sign up for that. Again, free 7-day trial for everything, and if you want to get both trading indicators and newsletters, the best deal is to get the yearly subscription, which is equivalent to $49.95 per month, or you can do a monthly subscription, which you can go as low as $29.95 per month for the indicators. And newsletters and indicators and newsletters are also have 7-day free trial, so sign up for that. Let me know if you have any questions. Again, thank you for watching. Don't forget to hit the like button, subscribe to this channel, share this video. Thank you for watching. Have another great trading week. Bye bye.